The Paris Agreement was signed nearly 4 years ago. Ever since, public and media interest has grown manifold. Climate change-related risks and opportunities are also at the forefront of finance. We are very proud to partnering with OMFIF to conduct an in-depth research to understand how central banks see their role in mitigating climate change-related risk and its impact on financial stability.
As part of this research, we surveyed 33 central banks and supervisory authorities from across 5 continents. We wanted to explore the variety of supervisory approaches that these institutions can employ to facilitate the transition from brown to green financing.
We hope this report provides a practical guide to help financial institutions prepare for the upcoming changes in financial regulation and supervision.
Our research shows that nearly 3/4 of central banks see climate change as a major threat to financial stability. Most of the central banks we surveyed think that it is their responsibility to respond to these risks, yet we are still at an early stage. Almost all respondents say that they're either including or planning to include climate-related considerations in their routine stress tests of financial institutions.
Central banks can adopt market fixing or market shaping approaches. Respondents to our survey were generally wary of the interventionist market shaping approaches. They were concerned that applying market shaping microprudential tools could have distortionary unintended consequences.
The central banks we surveyed identify 2 major obstacles to the incorporation of climate risk into supervisory practices. First, in relation to taxonomies. Several jurisdictions are currently developing their taxonomies to facilitate consistent and targeted sustainable finance actions. However, almost 1/3 of central banks are concerned about the comparability and the consistency of those emerging taxonomies. Then, in relation to the lack of climate risk data, a majority of central banks are concerned about the limited quantity and quality of data.
So far, only a small set of central banks have implemented far-reaching climate risk mitigation policies. But what our research shows is that the direction of travel is clear. More want and are trying to follow. But for that to happen, central banks and policymakers need to collect more and better data related to climate risk and the institutions they supervise.
Moving forward, the success of any policy response will largely depend on the engagement of market participants. The battle against climate change is all-pervasive and all-encompassing. It will create new challenges for our clients, but it will also come along with many new opportunities.